and welcome to Earnings Central. I am Ritu Singh. Now, State Bank of India has just reported a strong set of second quarter numbers. Profits are up almost 74%, net interest income up almost 13%. Both beat what the street was expecting in terms of the top line and the bottom line. Asset quality also saw an improvement. Gross NPA ratio improving to 3.52%. Net NPA coming below 1% at 0.8%. That is, slippages also a strong improvement there. They've come down. Gross slippages to 2,441 crores compared to over 10,000 crores in the previous quarter. And advances growth also remains very strong, almost close to 20%. Margins also saw some expansion during the quarter. To get into the fine print of the numbers, joining me now is Abhishek Kothari from the Mumbai studio. Abhishek, take it away.
Well, Ritu, as you mentioned, it's one of the best quarters that SBI has reported, especially given the fact that there is an all-round improvement. There is growth in the balance sheet, there is healthy improvement in asset quality, and that is aiding your P&L in terms of profitability. So talking about profitability, for the first time, they have reported a quarterly profit of more than 10,000 crore in last 7-8 years. So to begin with, the CD ratio or the credit to deposit ratio is at 10-quarter high of 72.4%. Which has been led by the fact that, loan growth is nearly 20% on a YY basis, perhaps the best in last 19 quarters. And for the first time after many years, sequentially you are seeing a market share gain for SBI. Net interest margin has come in at 3.55%, the best in last 7 years. Gross NPA ratio at 3.5% is the best in last 7 years. Net NPA for the first time has fallen below the 1% mark. They have reported the highest ever quarterly PAT. So P&L versus RPOL, just to run through, the NII is at 35,183 crore. It's a beat of 6.3% to RPOL. The PAT is at 13,265 crore, a beat of more than 35% on RPOL of around 9,800 crores. The credit cost, that is only at 0.33%, which compares to 1.44% in the previous quarter. Perhaps the lowest credit cost that you are seeing for SBI in last 7 years. So coming on to the business momentum, deposit growth in the domestic business is 9.2% on a YOY basis and about 3.3% sequentially. However, foreign deposit have grown a lot, 35.65% on a YOY basis and about 11.24% on a sequential basis. The loan growth in the domestic business was around 18.15% YOY and about 3.94% sequentially. And foreign business has grown by about 30.14% on a YOY basis and about 8.4% sequentially. So overall, you are seeing a deposit growth of 10% YOY and 3.5% sequentially, while loan growth is at 19.9% YOY and about 4.6% sequentially. Coming on to return ratios, which is one of the most heartening point that you are seeing across many lenders, especially PSU banks, the ROA has crossed first time in 7 years the 1% level, and ROE, as per my calculation, should be around 17-18% for the quarter, given the fact that they have given H1 number which is at 16%. Both the 16% and the 17-18%, the mark above 15% is very good and one of the best that you are seeing in last 7-8 years. The stress have also reduced along with gross NPA and net NPA reduction. You are seeing restructured book which is declined by 5% sequentially, now forming just 0.9% of the loans. Back to you.
Well, a short summary is it is a very good set of numbers, a strong show by State Bank of India in the second quarter. Joining us now are three guests to analyze these numbers further. Kunal Shah of ICICI Securities is with us. So is Ashutosh Mishra of Ashika Stockbroking. And of course, Prakash Diwan, market expert, joins us as well. Kunal, let me begin with you. Stellar set of numbers, your big takeaways.
Yeah, so a great set of earnings. It has surpassed our as well as consensus estimates hugely, and it was beat across all the operating parameters. So margin expansion of 30 odd basis points quarter on quarter, that was definitely ahead of the expectations, and this was further supported by more than 20 odd % advance growth. And the credit cost also came in much lower. In fact, it was less than 50 odd basis points, and specific loan loss provisioning was also merely 28 odd basis points because slippages were just 33 basis points during the quarter. So very strong asset quality. Credit cost also much lower. Advance growth was better and further supported by margins and no drag on the treasury on the treasury side. that led to significant earnings beat.
Well, Prakash, whoever said the elephant cannot dance, your takeaways and what stood out for you?
So I think, Ritu, we've had enough time to look at the detailed presentation deck that the bank has shared post its numbers, and that's why probably this discussion could tend to get a bit too number intensive. But my key takeaway is that this is just the beginning of a trend that a lot of us have been discussing, anticipating, talking about in terms of the larger, well-run banks kind of making the grade in a way where all metrics will probably beat expectation. In fact, when you look at what the numbers have come up as compared to the polls, you'll stop believing polls, right? So that's the whole thing, that when an SBI, a large balance sheet like SBI's, can be so agile to grow at this pace. It's phenomenal. And remember, every quarter on quarter, as the provisioning keeps coming down, the net accretion of new NPAs is so low, from 6,500 crores to 2,400 crores. I mean, that's a dramatic change. So the environment has changed completely. And look at the internals, their credit profile of the borrowers that they have catered to. The majority is now AAA. So what you're actually doing is you're setting the base for great visibility, lower NPAs in years to come as well, right? There's a healthy cross-selling improvement of 33%. There is great 10+% plus on the fee-based income. So these are things which are remarkable. We don't normally look at those so keenly, but here everything is kind of working towards that orchestrated, harmonized growth that is there. So my first takeaway is it's time to look at banks really seriously, and this is just not just SBI, but even the BOB numbers that probably got overshadowed. BOB is a smaller cousin of the PSU pack, but that also very clearly is telling you that SBI, BOB, all of them are now, as Abhishek pointed out, getting into a ROA which is phenomenally different as an orbit. 1+% is unheard of on a book like this. And if this sustains for 3-4 quarters, you'll probably see a very different complexion of the entire business. So remarkable stuff. 35,000 crores is no mean feat. Profits of 16,000 crores plus. All of these metrics tell you the kind of scale that is available and at such decent price to book multiples.
Prakash, taking a cue from what you said, the return ratios profile. My next question is to Kunal Shah of ICICI Securities. Kunal, for PSU banks, we are seeing a massive improvement in the return ratios, especially given the fact that now they are the larger ones, obviously are crossing the 1% level in terms of ROA. The ROE profile is also improving above 12 to 15%. How do you see the valuation changing the game for PSU banks?
So both SBI as well as Bank of Baroda, we had seen this quarter, they have moved above a 1% ROA mark, and this was well supported by credit cost. As I was mentioning, say for SBI, it is less than 50 odd basis points. Bob also continues to be less than 80 odd basis points, and margin improvement trajectory continued for both of them. And that is really leading to this kind of ROAs. Maybe given the scenario wherein we are in terms of the asset quality, definitely it's behind us, and we should see credit cost to be modest all through say this fiscal, and margin improvement given the EBLR repricing that is going to play out through the fiscal, and deposit cost for SBI has not inched up a lot. So we can see the sustenance of this kind of margins. And once we see that they are able to sustain 1% plus ROA mark, in fact, that will definitely lead to the valuation regrading as well.
Well, taking a cue from what Kunal has mentioned, the net interest margin improvement trajectory, Ashutosh Mishra, my next question is to you. We are seeing robust loan growth, not only for the banks as well, even in the industry level. The loan growth as of October 28, which is as per RBI data, continues to remain strong at and around 18% plus, and which is translating obviously into the results of PSU banks as well. Like for the first time, I'm seeing SBI gaining market share on a sequential basis. What is your own assessment on how long, can the loan growth actually improve from here and aid the net interest margin for the PSU banks?
So if you look at this point of time, we expect this trend to continue. The reason for this is that the key strength of the PSU bank is deposit franchise. And at this point of time, if you look at the deposit growth is far lower than the credit growth. We are seeing this trend after a long time. And in this, if you look extension of this, where we clearly see that the PSU bank has a strength on deposits and deposit growth is lagging. So definitely whatever opportunity is there in the market, they will come to them there. And that's way we will clearly see that the credit growth will remain very strong, led by the strong deposit growth franchise of these banks.
All right. Kunal, let me come back to you. It is, far better than what the street was expecting, whether it is top line, bottom line, especially the asset quality. Do you see this kind of a trend sustaining? We've seen only 2,400 crores of, a gross addition to NPAs from SBI. That's quite a good number compared to what the street was expecting.
Yeah, so one thing we need to keep in mind is this would be post the inter-quarter adjustments, and last quarter also they highlighted that out of 9,700 crores of slippages, in fact, say by July itself and mid-August itself, they were able to recover 2,800 crores from that pool, and this would be net of the recoveries from the slippages which were there in Q1. But definitely maybe 33 odd basis points still surprised positively. Everyone was expecting that the trend in slippage is gonna be low on a quarter-on-quarter basis, but not to this extent. In terms of the sustainability, when we look at it across the segments, in fact, retail, agri, SME, corporate, all the pools have shown an improvement in this quarter. Maybe in terms of the slippages, it might not continue to be so low on the gross basis. In fact, we could see some kind of an inch up for the full year. Our estimates are also slightly on a higher side. But let us hear the management during the analyst call in terms of what their view is in terms of the outlook.
Well, we certainly asked the management on that. And in fact, you know what? The recovery and upgrades are almost twice that of slippages in this quarter. And slippage ratio is just 0.33% and the credit cost is just 0.28. Like you're saying, it is an exceptional quarter. Perhaps we'll see some correction going forward. But Prakash, since we're going to be speaking to the management, what would you want to know beyond what we can see in these numbers?
No, so Ritu, the presentation is fairly well articulated and details out all aspects of the bank's growth. What's important is, there's a small footnote on the fact that YONO is now responsible for new client addition on the retail side, almost, if I remember correctly, some 64% or something. Now, if that is already a property that's matured to a scale, what's going to be interesting is how soon can the management decide, the bank decide to monetize that? Because that's a huge optionality that's built in. We've not been able to accord a great value to it as yet, but we do compute some sort of incremental addition to the bottom line if some monetization happens on that. They've announced that the mutual fund hiving off is not on the cards, but there could be something else. So those are things which will kind of act as triggers to the re-rating of the stock that is definitely likely to get underway with these numbers. So in addition to the detailing on the numbers, and of course more importantly, as Kunal also highlighted, the outlook going forward, because remember, we are in a high interest rate or a rising interest rate regime. Usually you tend to pick and choose the best borrowers in this kind of an environment because the weaker borrowers cannot sustain high costs. So the key is how are they managing to make sure that the credit growth does not inhibit any sort of a quality deterioration or slippages going forward. Because on a book growing as rapidly as this, you are bound to be careful about that. You have to be careful about that. So that's the element of the credit control and the kind of risk system that they are building. Otherwise, I think it's a stellar performance. There's no taking. You just have to laud the management, hear them out on how that's been achieved and how it could be continued in the future.
Well, Prakash, you spoke about, market perception. Let me just put one question on the valuations for PSU banks and across categories. Let's break it up into small, mid and large PSU banks. How do you see the valuation change, coming on to re-rating that you expect on the PSU banks?
Is that for me?
Yes, Prakash, it's for you.
Okay. So I was explaining it the other day about how the PSU bank sector as a whole is kind of getting re-evaluated. So you had this classroom with 7-8 rows where you had the front benchers like SBI, BOB, Canara Bank in that order, and you had a lot of those back benchers, the UCO banks, Punjab Sind banks, PNBs, and Indian banks, right? Now suddenly this classroom has got reoriented, and you just have 2 rows left. So one is the front row, and the other one is the second row, or whatever you want to call it. It's not nice to call it the last row, but it's the second row. So all the turnaround cases are in that second row, whereas the boys were turned around and already growing at a very rapid industry-leading growth like SBI, BOB, Can Bank. They are going to offer great value. So what's going to happen is that valuation metrics will change in favor of these first, and then the backbenchers will probably participate. I would believe the price to book multiples will undergo a rapid change, at least about a 30% increase over the next 3-4 quarters for most of these.
Okay. Prakash, sorry to cut you off, and thank you for your thoughts. Ashutosh and Kunal as well. The State Bank of India management is now addressing the media on their second quarter numbers. Listen in.
The press conference.